This is The Micro Effect.
The Micro Effect. www.themicroeffect.com.
You take the blue pill. The story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill. You stay in Wonderland. And I show you how deep the rabbit hole goes.
There was a mighty nation, blessed above all of creation. It was a rare and precious pearl, conceived in faith and liberty, home of the brave, land of the free. It was the envy of the world. But this shining city on a hill has turned from the Creator's will and let evil take control. Now the reckless men who lead them want to strip away their freedom and to steal their very soul. Now it's smoke and mirrors, switching baits, criticize and confiscate and let the guilty walk away. In this once righteous, godly nation, in the halls of education, they forbid a child to pray.
Well, good morning, America, Radio Free America, and good morning to the listeners of Connecting the Dots with Dan Happel Radio Show. This morning we have a guest on our show who is going to explain a great deal about cryptocurrency, about what's been going on with that market, with Bitcoin, and with a lot of new technologies that most people don't really understand, and quite frankly are a little bit frightening for those of us who are not educated in this particular aspect of money. And Jeff Wright is a gentleman who's been on my radio show several times before. Jeff is a security expert. He is also a gentleman who has written a really terrific book, The Citizen's Last Stand, which I highly recommend. I met Jeff a number of years ago in Bozeman, Montana, when he was at a political event and was on a book tour. And I had the opportunity to visit with him a little bit and realized this gentleman is really quite exceptional. And after reading his book, I realized he really was quite exceptional. And Jeff has an understanding of our financial dilemma that we are in through central banking and fiat currencies, probably as well as just about anybody in the world. And he has spent the last 7 years studying cryptocurrencies and has a really good understanding of how they work, what they are, what they aren't, and quite frankly, I think it's a message that our listeners and all of America need to hear, and this is something that I'm really looking forward to this show. And incidentally, we're going to also do a 1-hour version of the show on Thursday night on the Republic News Network as well, because I think this is something that Americans need to know, they need to understand, and at the very least, they will see what cryptocurrencies really are and what they really aren't. And with that, Jeff, are you on our line? And would you like to maybe do a little introduction of yourself to tell our listeners a little about your background?
Sure, Dan. Good morning, and Happy New Year to you.
Well, thank you. You too.
I think we're headed into another one of those extremely interesting years that's going to be even more wild than 2017 turned out to be. So we should be able to get a chance to, and one of the things we're going to get a chance to get a good look at, I have a feeling, is the altcoin and the cryptocurrency market. I guess by way of introduction, I can tell you that my interest in this has been long-standing, and is probably somewhat, I guess, from a personal standpoint, is it was kind of an offshoot of a lot of my career that I spent in banking and the banking industry, building various financial systems, transaction systems, credit card systems, all different kinds of systems within the fiat currency system that we have today. And I think, and one thing that happened was it became evident to me that way back in the 90s and in early 2000 that the existing system was headed for a major dislocation, if you want to call it that. Disruption is going to be a term that people use more and more, but I think in any case, at this point, what I would call it is a transition. We're headed into a large transition, and we're going to transition between our current state and the new world on a number of fronts, and that's where my interest has lied over the past couple of decades, is in making this transition, because it became apparent to me working in New York that the existing financial system was headed for a major default, and that would create all kinds of new possibilities. At the same time, I was working in an industry in the financial and technology system where I saw some amazing and incredible possibilities that system, that the technology allowed. And I think, and that one of the ways that's come to the fore right now is in this idea that, at least in the popular mind, is this idea of that people call cryptocurrencies. I'm not particularly fond of that idea, because I kind of think it gives a false sense of security, because people think of crypto in the form of cryptography and cryptographics, and I don't think that that's exactly the right connotation to take from the idea of cryptocurrencies. What I like better, and I think is really more descriptive, is simply cyber currencies. And cyber currencies, I think, is may in the long run, I don't know, cryptocurrency may stick, but I think cyber currency has a chance to stick as a label for these, or maybe alternate currencies. Whatever it is, digital currencies, alternate currencies, cryptocurrencies, or cyber currencies, to most people, it's a completely different and bizarre world. And I think, and one of the reasons I don't like the label of cryptocurrency is because of the idea that it conveys that these are somehow secure or immune or have a particular enhanced ability to protect you in your security. And I guess when we originally embarked on talking about this show, I was going to talk more about the mechanics of cryptocurrency, but I think before I get into those things, I wanted to talk a minute for something I think is equally important at this time and may have a larger impact on this and many other systems. And I think before we get into the discussion of actually what these alternate or digital or cyber currencies are, that we talk a little bit about what's going on and what's going to impact the entire digital world in the next few decades. I don't know if your listeners are aware or have heard the term of quantum computing. Have you ever discussed that on your show before?
Well, we haven't gotten into a lot of detail on it, and I'd love for you to get into that discussion to kind of preface the further discussion of cryptocurrencies or blockchain technologies, whatever that term we want to use. But I also, Jeff, you and I have certainly talked about this a great deal. I would like you to really explain to our listeners why we're in such a world of financial hurt right now with all of our central banking systems and the fiat currency systems that we have, and why we need to be looking at something else besides, the so-called government financial systems. And in fact, they aren't government; they're private banking. But at the same time, they've been given a rubber stamp by governments as being legitimate, when in fact, they're very, very iffy. Can you kind of maybe give, and this is something you're really good at, give our listeners a little bit of an idea why we're in the world hurt that we're in with our traditional fiat monetary policies?
Well, I guess if you go back a little bit in history and look at the last 50 years, it kind of explains how we got here in a lot of senses. And with regard to the state of the world's banking system, it really began, as you know, after the Second World War, with the implementation of the Bretton Woods Monetary Agreement. And that monetary agreement was at the end of World War II, was between all the world's powers in order to set up an international gold standard and to deal with the fact that the governments of the world, and particularly the states, had reached a point where it had huge reserves of gold, and in the course of building the material to execute the war in Europe and in Asia and all over the world, the United States had come into a position of basically being an enormous holder of the world's gold reserves. I think between 1939 and 1946, we went from somewhere in the neighborhood of about 6,000 to 7,000 tons of accountable gold that was directly owned by the Treasury to about 20,000 tons at the end of the war. And that gold had been paid to the United States in exchange for all the war material that the United States had supplied to the various countries in order to execute the war. Well, this presented a major problem, and the great powers, as they were known, saw it before the end of the war that there was going to be a completely different monetary arrangement after the Second World War, with so much devastation on all the other countries but the United States. We were left basically a singular superpower that not anybody could touch in any real way, except for the Soviets, who had the capability after 45 to deliver, and into the 50s to deliver when they proved their nuclear capability and their ability to develop a hydrogen bomb in the 50s, and I think that became evident. But short of just the nuclear capability itself, there was really, in no other sense, any country who stood equivalent to the United States. So we pretty much, when the Bretton Woods Conference between all the different central banks came together and countries came together to discuss the new financial arrangement, it was pretty apparent that we held all the cards, so to speak, in this case all the gold for the most part, and that we would control the world's reserve currency status after the war. between 1946 and 1964, we started a series of programs, one of which became the Marshall Plan, and where we came into Europe with literally billions of dollars to rebuild Europe. And in stabilizing that country and building that plan, we basically became the totally dominant banker, if you will, in supplying all those dollars into Europe. As Europe matured and recovered, by the 60s, all of that money that was supplied, and the dollar became the de facto currency of Europe. You could as easily exchange dollars as any other country's currency anywhere in Europe, and in fact, most places around the world. And so we not only became the de facto currency through the Bretton Woods Agreement, or the world's banker through the Bretton Woods Agreement, but we basically became the world's currency, reserve currency, because virtually all countries that held the currency could then participate in some way in the recovery. Well, that became a problem by the 60s. In the mid-60s, as all the other countries in Europe were pretty much recovered and back on track and wanting to establish their economies again on their own, these currencies started banging up against all these dollars floating around, particularly in Europe, and that really became a problem. And that's when things really got underway, because they had all these dollars floating around in the European system, and it was really starting to restrict their own the development of their own currencies and their own stable internal national banks. So they started particularly agitating in a very strong way for the removal of those dollars. And when they couldn't really get any response from the United States, the various European countries, and particularly France, they just simply said, you know what? We're going to start turning these dollars in and get our gold back. So they started pretty much vacuuming all the dollars out of the various European economies, and started taking them back and presenting them to the United States to the Treasury for payment in gold, because we were on the gold standard through the Bretton Woods Agreement. And by the late 60s, we had several problems underway. We had Vietnam, we had the space program, we had the Great Society, and those things. And so our government was spending and requiring huge sums of money in order to fund all of our effort. Well, these things were piled up, and by the end of the 60s, were creating huge stresses on the world's financial system, which was particularly and specifically us. We were the problem in that, and it was causing huge problems for us, as well as our neighbors across the world in trying to stabilize their economies. So it became evident by the late 60s that we couldn't sustain the level. Our Treasury could not sustain the rate at which we were losing our gold back to as they turned in their dollars to receive gold for all the currency. And it became evident to President Nixon and Arthur Burns, and they concocted this plan basically to slam the gold window and say, "I'm sorry, you can't have your gold back anymore." And they implemented that. They finally implemented the plan and got it pushed through in August of 1971. I think the date was August 26th. So that's when they slammed the gold window on international payments of gold backing the dollar. And that's when things started to really get interesting, because there was then all of a sudden there, in this currency, the U.S. dollar that had been the single most stabilizing effect, literally overnight, there's no stability for it. How do you value a dollar or value the remaining dollars that are outstanding if you have no hard asset to relate them to? And this pretty much set off a huge round of inflation in the United States as well, because we were funding all the debts that we were piling up through Vietnam and the space program and all the government spending and programs and worldwide, and it kind of sent a shock through the system. What are we going to do? Well, we still, and inflation started to run wild, printing dollars, trying to accommodate people's. There was no pricing mechanism, is what it boils down to.
Right.
Without a direct tie, there was no pricing mechanism for the dollar. So things started to really get out of control. And of course, they had to come up with some kind of scheme, and they had to find something to relink it. And that was when we settled on the petrodollar by 1973. That was again, Henry Kissinger and President Nixon turned around and said, well, we got to relink to something. What can we do? Well, this opportunity came up in the Middle East that Saudi Arabia, who was selling through OPEC, was the leading controller of the oil supply in the world, which was a hard asset and something fairly convenient to tie the dollar to. And so it became apparent that tying the dollar, not directly, but because there was no quote unquote oil standard, and that wouldn't be accepted, but you had to tie it to an asset somehow. And the way that they did that was to create what is now known as the petrodollar. And the petrodollar became the single biggest, savior and boat anchor that was tied around our monetary system now for the next 50 years, is essentially what it amounts to. In 1971, when that link was made on August 16th, I believe, 1971, when we delinked, and then in 73, when the deal came up with Saudi Arabia, that they would purchase all oil supplies internationally would be purchased with U.S. dollars and nothing else through OPEC. And when the Saudis announced that, and in exchange, what we said we'd do was we would extend the U.S. defense umbrella over the Middle East and effectively over Saudi Arabia and the Middle East.
Right.
And that deal pretty much sealed the fate for the next 50 years.
Including some of the interventions that we've had in the Middle East because of that agreement that we would provide that protection, that umbrella for the Saudis.
Oh, it's caused absolutely no end of anybody that is aware of our foreign policy in the region of the last 50 years is 40 some years is aware of what it's the incredible amount of problems that it has created for our national security in the Middle East and around the world, really.
Right.
But it was an extremely quick and convenient and easy way because since the majority of the nations in the world were oil importing nations, what they figured out is through the 70s, the 70s, 80s, and 90s, what it also created is an incredible opportunity to develop their own economies and their own markets. If the United States now was If you could now buy your oil, if I'm a country anywhere in the world who could now buy, and I'd have an undeveloped economy, and I want to develop an economy, I need money to do that. Well, the best way to do that is I sell cheap stuff to the United States and get their dollars, and I can get all the energy I can pay for at that point. And that basically set up the petrodollar recycling system around the world.
Right. But inherently built into that, Jeff, was the idea that we would literally turn the printing presses on hyperdrive and print money like there was no tomorrow. And as a result, between the end of the gold window in 71 and today, our dollar is only worth about 3 cents of what it was in let's say 1965 or 1969.
Well, precisely because but that was exactly the point. Is we could print these immense quantities of cheap dollars. I mean, what does it cost to print money?
Right. And I know our listeners, most of them probably understand this, but this isn't the United States Treasury that controls the dollars in profits from the, let's say, the borrowing of money. It's the Federal Reserve System, which is a private corporation, private international bankers, and quite frankly, the whole international banking system is set up on the same prototype, where private bankers are loaning money to governments, and governments are gladly accepting the deal because they can hand out goodies to their citizens and give away things and therefore get reelected to office because they are providing all these things to all these people, and the people don't realize what's happening is we're destroying our whole financial system.
Well, that's precisely right. I mean, if just look at what happened since 1969 and 1970 when this all took off, we have had literally an uninterrupted string of deficit spending by our government since then. It not only opened up the printing press for the United States and world trade. It opened up the largest printing press in history for any government in order to indebt itself without consequence, because they could literally blow trillions of dollars into the global economy for those purchasing our debt. I mean, other than dollars, what was the next best thing to purchase with those dollars and add to your own reserves was Treasury bills. Mm-hmm. So, it was a wonderful arrangement for anybody that wants to in an illusory fashion, and it's just an illusion because it's all fake money. I mean, it virtually allowed the United States to prop up its own economy through thick and thin. You know, we have had these quote unquote recessions. Essentially, what a recession has become in the post sound money world, in the fiat currency world that we have today, what this has become is simply either you have moderate to fast growth or you have slightly slower growth. But the periods of actual negative growth that we used to suffer previously virtually disappeared because every recession that we encountered.
Well, welcome back, our listeners, to Connecting the Dots with Dan Happel. Today, my guest is Jeff Wright, and we are having a discussion about the financial system and how cryptocurrencies, or let's say companies like Bitcoin are having an impact on our system and how they may provide an alternative to a system that is extremely volatile right now and has a very good chance of really failing. Jeff, welcome back. I'm sorry we had to break in with that commercial break, but you were explaining about how the financial system, how we've literally leveled out our financial system by just turning on the printing presses, and how at some point, and I'm thinking it should have really happened quite some time ago, but we've managed to kick the can down the road. At some point, our whole financial system worldwide will become so obviously, let's say, convoluted and fiat and nothing backing it, that people will finally say enough is enough, and we could face a huge international financial collapse with the dollar right at the center of it, because right now we're the most indebted country in the world by quite a large factor. Okay, let's go on with that, and then let's get into an explanation of how these alternative monetary systems are working.
Well, obviously, and I have a tendency to try and get into it is a somewhat lengthy explanation to understand how history brought us to this point in the creation of the alternate currencies, I guess, or a private type of alternate currencies, and that has generated this current frenzy that we see in the altcoin, the Bitcoin and the altcoin market. And to try and summarize, so that we don't get too far off in the weeds in that, because I have a tendency to do that, and I realize that but it's very important to understand how we got to this point, and really, in that environment, the logical set of decisions that the policymakers made in all countries in order to bring this about. And that blowing trillions and trillions of dollars into the global monetary system was really a very cheap option. You just, once you have established yourself through petrodollar recycling, because if you want to develop, any country in the world can see, if you want to develop your economy, the best thing to do is to sell cheap stuff to the United States that you can easily manufacture and sell those goods and get dollars back, so that you can buy your energy on the oil market if you're not an energy-rich country, and that can allow you to develop your economy. And that's exactly what happened. All the countries of the world saw this opportunity to develop their workforce and to develop their own internal economy through simply participating in the petrodollar recycling system. And it cost us, in apparent terms, cost us nothing. We could simply create and blow these dollars into the both through deficit spending and through the dollar creation throughout the world, and we could simply create endless debt through cheap dollars. The countries would acquire those through developing products to sell to the United States, and all of the subsequent economic dislocations that you've seen in the United States occurred through this petrodollar recycling system, because obviously our wage scale and our economic costs in the being a fully developed economy could not possibly compete in that environment with all of these smaller countries who had workforces willing to work for next to nothing to produce those goods to gain their dollars. So it was a very convenient system in many ways for the entire world, and we reached the point where we were literally, any country's single source for foreign reserves was the U.S. dollar, so that in the ensuing years after the 70s, we became the de facto currency standard for the world, in having 60 to 70% of foreign reserves, even up to 70-some percent, and as high as 80% of the world's currency reserves were held in dollars everywhere, because countries would simply acquire those dollars to develop their economies and sell us cheap stuff. And that created huge problems here in the United States, obviously, that we've seen in the last few years, and started creating huge economic dislocations within our own system. Many economists and many people misidentified the source of our problems and the world's problems, as they put terms on it like outsourcing and various descriptions to describe. But the fundamental nature of the system was this petrodollar recycling system, and that's what created. We just simply blew the money into the economy, and they used it to develop their own. So through the 70s, 80s, and 90s, and in the development of from the European community to by the year 2000, it created this situation that made it possible for Europe, realizing they now had a second problem developed by the petrodollar recycling system that made it necessary to take the next step, which was to find a way to use that petrodollar recycling to establish their own separate monetary system, where they were literally going to be, if you will, subsumed into the U.S. economic system. And that was what generated the creation through the 60s of the European community, and then eventually by the 90s, the European Union. It became imperative for that in order to, in that environment of fiat currencies, Europe had no choice but to establish some type of economic independence, and so the creation of the euro dollar was directly implied, had to be accomplished, and that's what it did exactly, is force the creation of the European monetary unit by the end of the 90s, and the euro, so that there was again a chance for them to establish a somewhat independent economic system from the United States, while taking full advantage of the status of the Federal Reserve note throughout the world in the creation of all these dollars. Well, obviously, you can look at the development of the euro and see that there's a whole, and in some fashion, it really started to stabilize the European economies through the creation of the European monetary unit. But it also brought another set of problems, and that was simply the fact that it put the United States, still put the United States in a position of dominance that became intolerable in foreign policy and national defense, and in many other arenas. And by the end of the 90s and the early 2000s, it was obvious that something had to give. And what basically had to give was the stability of the entire economic system, loaded with so many trillions of dollars of debt in the form of Federal Reserve notes floating around the world. Well, the opportunity there became apparent, and the invention of and the advent of digital currency was a great answer. So when this idea of alternate currency or cryptocurrency first became first a concept, and then an actual set of product offerings, if you will, by 2010, people saw the advantage that could be gained by regaining some level of individual control in the currency system by having a completely independent currency that could not be manipulated by a central banking authority. And hence the idea of alternate currency or crypto or digital money, essentially. Now, if to understand what cryptocurrencies or cyber currencies are, you have to understand the nature of money. Money is simply a human invention for economic exchange that can be produced in effect by any item or any medium of exchange that can meet the three basic requirements of money. If you look at what gold presented in that equation, you understand that money has three basic principles or properties to it that makes it money. It has to be a medium of exchange so that you can transact economic activity effectively. It has to be a store of wealth in some form that people perceive is valid. And it has to be a unit of account so that you have a system of keeping track of what that relative store of wealth is in order to maintain the exchange. Well, once you understand that any precious commodity or any scarce commodity that meets those three qualities can then be designated essentially as money. Throughout history, you've seen where any time that any item presents itself that it can be accepted as a medium of exchange, it can store wealth so that that any accumulated or productive wealth that's created in economic activity is valued and its relative wealth maintained, and it presents the ability to be a unit of account. Well, that whatever it is, that item can immediately be considered as money. Gold and silver and metals as metals, they have no, people use this term all the time of intrinsic value. Well, intrinsic value is simply the perception by humans that a particular item is important to them and it's scarce. And so it represents the ability to produce those three qualities: a unit of account, store of wealth, and a medium of exchange. Those properties, once they can be assigned to an item, immediately produce the idea of money. In the digital world, with the invention of the internet as electronic exchange, if you look at the world's monetary system, the first thing that you see is that very little of the money that is present in the quote-unquote, and I always use the term money in the existing system with quotation marks around it, because once you start producing endless quantities of an item, it really loses the one key important quality of what determines money, and that is store of wealth. If you're inflating a currency beyond all reality, you're not really creating any store of wealth at all. It becomes entirely elastic what that actual value is, and whether you do that through fiat currency or some other mechanism, it really is and you can maintain that illusion even though you removed one of the principal properties in the store of wealth. If you can maintain the illusion, you can continue to develop that fiat currency system endlessly. and that's what we've done for quite a long period of time now, is we've maintained the illusion of the Federal Reserve note as a store of wealth when in fact it's not a store of wealth at all. As you mentioned, it's become completely, in effect, valueless in real terms, and given unto itself an extremely movable, a highly mobile definition of what is a store of wealth. And in fact, it really hasn't become a store of wealth at all. It really has become a loss of wealth once you understand how this system is developed. And but going back to the discussion of how is that? How do you produce that illusion? Well, when any intrinsic value is simply assigned by humans in the production, the initial production of any item that you want to designate as money, such as gold or silver, you suddenly realize that you can apply those properties, or that the property of fundamental value is established by the productive work that goes into obtaining whatever the scarce item is. And so in the form of metals, mining it is what produces its initial value. And today, if you look at the mining industry itself, the gold mining or metal mining industry, if you have bulldozers and ore crushers and all the implements of the mining process that produce the rare commodity of the metals, those tools can be translated into any form of productive work that produces the item that you're assigning value to. If you look at what is occurring, and the reason that altcoins and Bitcoin, the term mining is used in order to produce a quantity of the valued item, which is the accountability and the medium of exchange, you'll see that cyber cash or alternate currencies have exactly the same properties. When I hear people say, well, altcoins or cyber currency is valueless or is fiat currency because it's produced out of thin air, that's simply not true. You cannot produce Bitcoins without applying the same process to the mining effort that you do for any metal. In order to mine altcoins or Bitcoins, what you use today are computer hardware, software, programming skill, and electricity. Those are valued items within the existing economic system that are just a slightly different version electronically of what is used in gold or silver mining to produce the metal. You can't produce an altcoin without applying those fundamental valuable commodities of computer hardware, software, programming skill, and electricity that's used in the process. And all they're doing is replicating in a different form the same principal qualities that you use in metal mining. And that's why the terms are similar.
Right. And I want to impress on our listeners that the reason the Bitcoin and the alternative currency systems are developing the kind of wealth and the kind of value that they are is because they are based on something of actual value. The mining that you're referring to with the computers, with the hardware, with the software, with the electricity that's necessary to increase the worth of the cyber currencies is exactly the same thing as the sweat labor, only it's with technology at the base of it instead of the sweat and the hand tools and the picks. And that's exactly what I want you to kind of explain to our listeners, Jeff, because I think people have a real misconception about the cryptocurrencies because they see this as something, another fiat system that's just produced out of thin air, and your explanation will really try to help put some flesh on that.
Right. Well, that process, again, if you just look at the two objectively, each one is a process to produce that value, and it requires the same. It's simply a different form of the same set of processes. You don't use bulldozers. You don't use bulldozers and mining and mining equipment and ore crushers and all the things that you have. Those are other forms of tools that are used productively by humans to produce gold ore and silver ore and extract the metal. That are you just have a different form of the same principle methods that are used to produce cyber cash or digital currencies.
Jeff, we're going to go into another commercial break, but this is a great point because after the break, I'd like you to really segue into a complete description of how this whole system works.
That'd be great.
This is the Micro Effect.
The Micro Effect. www.themicroeffect.com.
There was a mighty nation, blessed above all of creation. It was a rare and precious pearl, conceived in faith and liberty, home of the brave, land of the free. It was the envy of the world. But this shining city on a hill has turned from the Creator's will and let evil take control. Now the reckless men who lead them want to strip away their freedom and to steal their very soul. Now it's smoke and mirrors, switching bait, criticize and confiscate and let the guilty walk away. In this once righteous, godly nation, in the halls of education, they forbid a child to pray. They say we need to spread the wealth. They pretend to guard the health of the feeble and the poor, while the hand they hold behind their backs confuses and conceals the fact that the wolf is at the door.
Welcome back to Connecting the Dots with Dan Happel, and today my guest is Jeff Wright, and Jeff has over the last hour given us a really, really good insight into how our financial system has gotten into the mess that it's in right now through the last 70 or 80 years, really from the Bretton Woods conference on, and how now there is an alternative that is starting to present itself. And quite frankly, he's here to describe how that system works so that our listeners can learn more and maybe take advantage of that type of system to help really restore and to preserve their wealth. So with that, Jeff, welcome back and thank you again. And let's go ahead and continue on with that idea of storing wealth by using alternative currencies.
Sure. Thank you, Dan. I appreciate it. I guess that at this point to kind of move more directly into the cyber currencies themselves is just basically summarize the past hour with, once you understand that the fundamental principles and properties that are employed in the production of cyber currencies are really no different in nature, in their nature, from what was used to produce precious metals, then you've really set the stage to understand the explosion of the alt currencies as people come to understand those principles. Now, any product, any commodity, any precious resource that requires that technology and labor to extract, once you've understood that the fundamentals are the same, you have to look at it and see, well, how do we go about the process of actually monetizing or turning into money this new resource that we now have available to us, value resource that we now have made available for people to use as money. How do you establish what its intrinsic, what we like to call the intrinsic value, as we do with gold or silver? How do we establish the intrinsic value of what these digital bits in the form of cyber cash are worth? Well, it's very interesting to me that when you consider the cost of the tools involved in order to mine digital currency, and understand their essential value in the process, you realize it's interesting that it takes fundamentally about the same amount of material pricing in the form of the existing currencies in order to price a unit of account, which is called the Bitcoin itself, that it takes to price an ounce of gold. It currently takes, and the cost is the actual cost is increasing of what it costs to produce a unit of value out of the alt currency or Bitcoin system that it takes to produce an ounce of gold. Early on, when the mining started in the reserve, when the Bitcoin itself, we'll just focus on Bitcoin a minute before we go into the alternate currencies, but the original unit of value, which was a Bitcoin, was established. It cost in the early days, when there were few miners and the accessibility was easier through the programming tools, it costs much less you could produce a Bitcoin for just a few cents or a few dollars. Just as when we first started massively exploiting gold and silver, you could simply pick gold up off the ground through most of the deposits of the world. But as we started consuming those easily available deposits of surface gold and silver and the metals, the mining became more and more difficult. Well, in exactly the same way, Bitcoin was originally set up with the idea that there was a limited number. So it's automatically a scarce resource. There's a limited number of Bitcoins available, which is approximately 21 million. To date, about little over 16.5 million Bitcoins have been mined. And as they are mined, the cost of mining becomes harder because the mathematical algorithms that are used to mine the coins and to verify the blockchain ledger, the calculations and the amount of processing time involved becomes more and more difficult. it becomes lengthier. It becomes harder to mine, just like gold or silver, as it's depleted in the easily available deposits, becomes harder to find and mine, and more expensive. And the same exact process is occurring within Bitcoin. As we get to the last 4 million or so of the available Bitcoins in the resource, if you look at that as a deposit, as a natural deposit, each coin that's mined now is going up in cost to mine. It started out as a few cents and then a few dollars, and now it's escalated. And a couple 3 years ago, it was maybe $900,000 a coin. Now it can cost as much as $3,000 to $4,000 in those essential resources to mine each Bitcoin. So the cost of mining is going up, and they're becoming harder to obtain. At the same time, the concept of altcoins and cyber currency is undergoing the first stage of its monetization as it becomes money. Now, a lot of people will dispute that monetization concept, but that is because it's behaving early on more like a precious commodity in its extreme valuation, which to a large degree is exactly the same stages that gold and silver went through early on as it was establishing its intrinsic value. Right. It fluctuates wildly, and that's because right now it's being looked at. There's two things that are happening right now in the pricing of the alt currencies, and particularly Bitcoin. As the early stages of understanding this new monetary system occur, well, we have obviously one of the things that's going to happen is you have the speculation stage, and that's what we're seeing right now. And in many ways, what the speculation that's happening to the altcoin and the alt currency market, what it's causing is in these extreme fluctuations. Those are happening not because the immediate intrinsic value of the new currencies is understood. When you have a $15,000 or $20,000 Bitcoin, does that actually represent the ultimate value of the cyber currency itself, or is it more a recognition of the weakening fiat currency system that you're buying those Bitcoins with at this point? Right. What's happening in the wild speculation that's going on in the altcoin market is really the recognition that the value in the fiat currency system. When you say that a Bitcoin is worth $15,000 or $20,000 or whatever it is, that's not so much a reflection of Bitcoin's intrinsic value as much as it is a reflection in the decreasing value of the existing monetary system, of the fiat currency system. That's what you're having trouble assessing. What the investor or what the participant in the new market is trying to figure out is what is this worth against the old financial and the old monetary system, the existing monetary system. And the second part of that is going through the normal value assessment that any new commodity, technology, whatever it is. For example, I mean, Apple computer, when you enter the value of an Apple share is not established by the investment market. I mean, we're not in the money market yet. We're now in the investment market. And the value of the stock, if you will, of Apple or any other initial technology offering is being established through the value of its products, what the intrinsic value seems to be in its product. And obviously people are now assigning a very high value to those items of technology in the valuation of the stock of those companies. Well, we're doing the same thing in the altcoin market. We're both assessing its value as money, which is a lower and in effect when eventually it is monetized, that and more stability is introduced, you'll see that's a lower underlying price than what you have levied on top of that, which is the investment value of being one of the early adopters. Right. And that's what the cyber currency market is going through today. It's going through the stages not only of its technical innovation and pricing, but also its intrinsic value and pricing as an eventual source of currency. And while right now, and as it monetizes itself, then is when you're going to see more stability brought to that market, as it begins to price itself as an actual currency or an actual monetary device within the financial system. So it's more than and what I recommend to your listeners is that if you're not a sophisticated investor in the technology and the investment markets, the altcoins are not the place for you right now. Until the adoption phase and the investment phase and the speculation phase in the investment concept begins to stabilize itself and the actual digital currencies begin to monetize, this is no place for the faint of heart, that's for sure. When you have these extreme fluctuations of, even in Bitcoin, for example, thousands of dollars, literally in a few weeks, thousands of dollars of variation. Obviously, you're not looking at something that is currently considered a stable source of monetary value. You're looking at something that is largely being priced as in an investment market, speculating in the eventual value, in the eventual long-term value of the technology itself. And that's what the larger market as well has seen. When you boil it all down, when you boil the technology down, the value is in the architecture. And one of the key values of that architecture and the difference between the existing fiat money system and any eventual cyber currency market is the decentralized nature of the architecture or the design of the system. Mm-hmm. In the fiat currency marketplace, if you will, the basic architecture of that marketplace is centralized. We are beginning the transition. What another thing that it represents is the very transition of our entire system of economic thought, as well as the mechanics, from an entirely centralized, centrally controlled system of government. We have central control of all these different models of control, and that we currently have are economic centralization and financial centralization and market centralization, where there's a single source of decision making and authority that flows through the entire system. You can't. There is one source of control for the entire dollar-based fiat currency system, and that is the Federal Reserve. There's one point of control that determines the release and the value of the European monetary unit or the Japanese yen, and it's central banks. Central banks determine the volume and number and value of those currencies simply by what their policies dictate will be how many units of account are blown into the system. Well,
and Jeff, I don't want to interrupt you, but I want our listeners to understand too that the concept of a World Bank and an International Monetary Fund is based on the same ideas of fiat currency. It's just moving the dynamic one step further up the process and making it even more centralized and more controlled and more manipulated, and moving it closer to a point where individuals have no power over the system, but that the system has complete and total control over them. And that's what would happen under a world financial system. And not only that, but they want to make it completely digital so that we have no idea how this fiat system is even being created. So now, I had to say that because it ties right in with what you're talking about, Jeff.
Right. Well, that's I mean that it is the key and fundamental difference. You have existent in the altcoin system, in the cyber currency, cyber cash, whatever you want to call this new world, a completely decentralized architecture of control. It essentially runs itself, and it is a product of the distributed blockchain and producers or blockchain verifiers and miners that exist in the network. There is no central bank simply creating and controlling the process of transacting it in Bitcoin or the process of exchanging Bitcoin. You don't have to clear a transaction through any central authority. It is the action of all of the servers that are acting as miners and blockchain verifiers that control the system. It is in effect the users and producers in the system that are controlling its fundamental operation. It is not a single decision source saying, today this is what we're going to change the interest rate or the cost of that money so that it behaves this way. That is not in any way how any of the alt currencies work. They work in what's known as a peer-to-peer environment. You have that are of equal value in the decision-making process, not one master central authority saying today we're going to set the interest rate here as the price of money, and tomorrow we're going to set it here as the price of money. What you got to pay for that, what you have to pay to engage in that system in the form of interest that you have to pay back to the banks who lend out that central currency, and its ability to operate automatically and independently is really one of the key things that's determining the value of each of the altcoins in the market. Now, what an altcoin is different from Bitcoin is they're simply using the same principles and some similar methodologies. They are other product offerings within that market. Some of them are related to Bitcoin and work off of the Bitcoin blockchain. Most of them, many of them, in fact, most of them are their own versions using the same concepts and basic technologies. Only they're offering themselves as alternatives, and that's why the term altcoins, because they have their own special properties or tweaks. For example, the difference between a Bitcoin and a Litecoin is the fact that the Litecoin can produce a more efficient blockchain verification process, so that transactions can be more quickly. It's more efficient, it's more effective, and therefore it may ultimately be a very significant competitor, which it has become, against Bitcoin. There are others. And,
Jeff,
and
I don't want
but again,
to. I don't want to interrupt you, but I think it's important that you explain to our listeners what the term blockchain means and how blockchains, effectively how blockchains work, so that when you're explaining some of these things, it's clear to the listeners exactly what you're saying.
Right, and and I appreciate you when you, as I'm explaining these things, if I say something that requires that kind of explanation, please feel free to interrupt, and with that, and I'll address that specific issue. The blockchain itself is simply what amounts to a ledger. It is a ledger of transactions, and that ledger is a database of all the transactions that have been completed prior to and right up every 10 minutes in Bitcoin, for example. It closes each blockchain calculation every 10 minutes. Every 10 minutes, all the servers, there could be thousands of them out there, that have in a 10-minute segment a transaction initiated by a user of Bitcoin. That every 10 minutes, all of those transactions in the ledger, in the distributed ledger, are calculated and summarized and verified between every server that is executing Bitcoin transactions in the network. And they're closed out. And when everybody agrees that the first one that arrives at the solution in verifying all those additions to the ledger sheet for all the transactions that confirm that user A and user B completed this transaction, this exchange, that goes, and when all of the different servers on the network agree that particular chain of transactions that segment adds to the chain of the completed ledger, they all agree, and they've verified. The first one that reaches the answer or solves the answer, that particular one, and this is why it's important to understand, that particular miner is rewarded with the transaction fee, and that's how there's a natural incentive built right into the system that as the transactions are verified in the blockchain, and each level of blockchain verification is reached every 10 minutes, and all the servers on the network are then notified and updated, and they all have exact duplicate copies of the ledger. That's when that transaction block closes and the next one opens, and that's when the first one to solve the problem gets the gold, if you will. They get paid for their work and effort, and that's how the system automatically and independently. That's the peer-to-peer, what's called the P2P, the peer-to-peer nature of the system. It closes out each transaction chain every 10 minutes and then opens the next one for the next set of transactions. Now, every currency's value then is determined by the ability to most efficiently, transparently, and effectively close each transaction chain in a period of time and verify the results. The reason that Litecoin, for example, is one of the strongest altcoin offerings in the market is because its efficiency at closing those transactions is very good, and so people are naturally gravitating toward it. In fact, it's shown itself to be more efficient and more effective in closing the blockchain transactions. So it's become, and that's why it's, along with all the other properties that it presents to the market, its transaction efficiency is turned out to be very positive in relation to Bitcoin. So obviously it started to take great interest in the marketplace. And if you look at and rank, and currently there's about 1,200 altcoin offerings. If you look at them and rank them, they all have their individual, just like different currency offerings when you have all different countries offering their currency in the market. Each currency is establishing and taking its place in the market based on the effectiveness and efficiency of its blockchain transaction ability.
Okay, good. That gives a really good overview of what blockchain technologies are. And we're heading into a commercial break, but on the other side of that, let's get into some of the details on how we can explore all the possibilities of this. Today is Mr. Jeff Wright, and we've gotten into a really good discussion of crypto or alt currencies. And I had a question for you, Jeff, that was sent to me by my good friend Bob Williams, and that is Bitcoin limited, or can the creator make more? That's something that they've said that we've got 21 million of those units. You've answered a lot of the questions that he had, but that's one that I'd like to address before we get into the further discussion. Is there a way that they can actually create more without screwing up the whole concept of cryptocurrency?
Well, that's a great question, and the answer is no, and possibly yes. But let me explain. Okay. For example, and this is going to be an interesting part of the experiment of establishing value. Bitcoin is fixed. It in fact, when the blockchain has to go through its verification process, it has to constantly check and recheck to make sure that the actual transactions and the total number of accounted for units within the system match the limited number that was designated from the beginning. That there's only X number, and in this case 21 million odd coins that exist throughout the entire system, and that there is verification that there have been no additions to the 16 million that have been mined and are out in the wild, if you will. That has to occur within every cycle to ensure that there's been no compromise of the system. Okay, but as I said, when you look at the altcoin market, there are various types. There are various offerings. Now, one unique experiment that is going on in the cybercurrency market right now is Ripple. Ripple breaks that model, and essentially it is operating as a fiat currency, because one of the things that the initiators of Ripple did was they're not operating under the Bitcoin model. They're operating under a different, and in fact what appears to be very much like a fiat model. But Ripple is also gaining marketplace presence. So what we're going to see is whether or not, and as I said in my book, if you remember, under this area, when I started identifying this from 5 years ago, a free market money marketplace operating independent of a central banking system can present all different types of currency offerings to the market. Now, everything we've seen the fact in the existing fiat currency marketplace of the national currencies that they can operate in a fiat currency manner and run a system. The only question is how long will it last before it in fact implodes? When people realize that essentially fiat currencies are not a store of wealth at all. Well, Ripple presents the same thing, essentially the same thing. The owners or the originators of Ripple, when they created and offered it to the world, the first thing that was done was they mined out all of the coins in the Ripple system right up front, and released and then controlled the release onto the market, meaning that they're essentially acting as a central banker for that system. Now, Ripple is gaining attention, though, on the strength of its blockchain, or the ability to maintain the integrity of transactions, just like any other financial payment system that exists in the fiat currency market. What right now that most investors in Ripple are investing in the very blockchain technology itself, not in the currency, not so much in the currency value or the currency product. They're investing in the blockchain product, the ability, because Ripple is extremely efficient at gathering, collecting, and assuring transaction integrity. And so the interesting part of this is that Ripple itself is being valued and is being invested in more as a technology offering than a currency offering. Like I said, there's two layers to this. There is the technology itself of the blockchain and its efficiency and ability to clear transactions and to operate as an exchange mechanism. And then there's the currency offering that overlays that is the money. And so what you see is that is a split in the marketplace already, where people are valuing the altcoin market using two methodologies. They're using it to evaluate the blockchain integrity and efficiency and accountability, and they're using it as not only that, but in addition, what the value of their cash or currency offering is in that marketplace. So it presents that's why there's at this point in the marketplace, this is not a place, as they call it, this is no country for old men, as they say.
Right. Yeah. Not for the weak of heart, and not for the casual investor that doesn't want to be paying attention to how this system really works. This isn't a speculation, or at least it shouldn't be, because there's a lot to it, and that's what you're trying to explain to our listeners.
Well, it would be kind of like trying to explain to somebody from the 18th century how the 20th century global market works.
Right, exactly, and that is one of the key things that's going on with the alt currencies right now. Is it's really based on all these new technologies, all this new information technology that's coming out, and how our whole system, our whole culture is going to change as a result of these new technologies.
Well, you're looking at the beginnings of the currency and transaction system of the world for the next 100, 200 years. That's being developed in a very short period of time, and that's what's hard to accommodate. Is we've just spent the last 20 years where the majority of the world's population were just beginning to understand, and I view it as I view the altcoin and the cyber currency market really as the only first real iteration of the potential value. Eventual value of the internet. This is really, to me, right now, having been in this business, in the internet business, the digital communication business since the 70s, to me, the altcoin market that's just developed in the last few years is actually the first real implementation of what I consider the ultimate value of the internet itself as a technology. We're just beginning to actually get to what the real technology presents.
And Jeff, I have to say, one of the things that the internet has provided, and frankly, the people that like to control other people don't like it, is a freedom of information and an understanding of new things that virtually anybody can access if they want to. And my question to you is, how are we going to keep the control freaks who have controlled everything for so long from being able to bastardize or to take over these new technologies?
Well, the key again is the decentralization. The reason that there's so much fundamental interest in the altcoin market is the same reason that so much fundamental interest went into the internet as soon as it started to be widely available to the average user, and that is the decentralization of information control. For 500 years, we have lived under information centralization. Information was always originated and distributed from one central authority, just like our economic system. Whether it was under the king or whether it was under the Federal Reserve, the economic control was maintained by having centralized control. The internet itself as a technology broke that model, both in architecture and communication, meaning that the fundamental design of the internet virtually precludes, in all but one manner, but we can get off into the weeds there if we talk about the international addressing scheme of the internet, which may be shortly obsoleted anyway, and so we have complete decentralization of the technology to where it's a distributed computing and a distributed communication model. You can have where no single entity really has any centralized control, and this is why the advent of the internet, even though it was developed by a government agency, the essential architecture of the construction, the design of the whole network was meant to be to survive nuclear war. That was its original intent of the architecture of the internet, was to be able to survive centralized survive through decentralized control, so that no enemy could control one section and destroy and take out the entire network. Decentralized control and management made it impossible. It could operate independently of any center of control. That's the same exact quality that exists within a peer-to-peer transaction environment. Is that there is no one central authority. It is the peers themselves who are ensuring the validity and the accuracy of the transactions, and in fact the architecture itself operates completely autonomously outside of any centralized control. Nobody can go in, not even the original designer. Once it was released into the wild, Satoshi Nakamoto, whoever it or they might be, once it was released into the wild, they have no control over it. They can't control its operation. It is completely independent of any centralized control.
Right. And that's also a reason that people like Joseph Stiglitz, the former chief economist of the World Bank, and he's now a Columbia professor. Once the altcoin market's completely banned because it can't be controlled by a government, and needless to say, he is, the epitome of this concept of central bankers. They're in a panic right now, aren't they?
I'm sorry?
The international central bankers, the fiat monetary systems of the world, right now they're in a panic over the alt currency markets and the potential to take away the control that they've had over literally all commerce for decades, for centuries.
Right. Well, that's the key. Well, they seem to alternate. They seem to be very schizophrenic. They alternate between acceptance and denial, because depending on what stage, if it looks like the altcoin, the initial chaos that's present in any actual free market, if it looks like it's getting too chaotic and it's scaring people, then they're loving it because they're hoping it destroys. But then when it seems to come right back and restabilize and move to the next level and gets more adherence, then they go back into panic again. Right now, and a lot of them, what they're studying is the blockchain. They're trying to figure out. The central banks are currently in their panic, are trying to figure out if they can take advantage of the blockchain in any way to change their own transaction model that would still give them centralized control, but in effect emulate the qualities that the marketplace was seeing in the altcoin market of decentralization, and that's going to be an interesting hybrid to watch evolve if they can. It may not ultimately, their model may not ultimately be adaptable or vice versa, and they will continue to lose control, and that's a good thing. And but they realize that they have no choice, that no matter what they do, they can outlaw it and it'll still operate. They can attack it and it will still operate. I suspect that a good number of these hack attacks that have been attempted so far are most likely either governments or major banks that are attempting these hacks to see if they can break it somehow, and they've had only very, very modest success and mostly failure. They've never really successfully in any large scale way attacked anything but weak offerings that the marketplace itself is determined are not going to make it, and has basically ignored those currency, those altcoin offerings that are out there. So they haven't been, any of the central players in the altcoin market know that they cannot survive if they cannot guarantee both the quality of money and transaction integrity from outside interference and compromise. They know that. They know the marketplace will immediately kill them if they show any weakness there.
Well, that's a good point, and I know that we're going to be running out of time here, but I do want to let our listeners know too that we are going to have a continuation of this discussion. Let's say a more condensed version of it on Thursday night on the Republic News Network. So, and as a matter of fact, I think, Jeff, you and I had discussed this is a great way to do this to our program, and then we will kind of try to distill it into something in an hour and maybe see if there's some areas that we couldn't cover that we do cover in that next hour. So that's going to be a pretty intense hour, and that will be on Thursday night on Connecting the Dots with Dan Apple on Thursday night on the Republic of the United States.org website, and we will have that program on there. Would you give our listeners, Jeff, an opportunity to learn a little bit more about how they can get your book and describe a little bit. I tell you what, I was absolutely fascinated when I read your book because it really hits the nail on the head in so many areas. And it's an extremely readable book, and it's an extremely, it's an easy book to read. You write in a very organized way. Give our listeners an opportunity to know how they can get a hold of your book, and then we'll try to wrap up with a discussion about how our listeners can get involved and learn more about the altcoin markets before they tune in on Thursday night.
Well, I'll kind of take those questions in reverse. If they want to learn more about anything we've discussed here today, all you have to do is go on the internet and type in virtually in the URL, the address block at the top. Simply type in any question that you have as a question, and you'll get virtually no end of sources, hits come back that will direct you to all kinds of anything from the most technical and arcane that you really don't want to read. Only if you're somebody like me would you read them, to very clear, straightforward articles and papers on how the various product offerings work and how the marketplace works and how CyberCash itself works. So it's very easy through the internet. There's literally, and it's growing every day exponentially, hundreds and thousands of sources of good information that you can read, and then it's just a matter of each individual reader selecting what they want to learn about based on the question that they input. So that's a good way. If you want to obtain a copy of my book, and a lot of this in the chapters on banking and finance, I laid out all the fundamentals of, from 5 years ago, a lot of things that were going to be happening and are happening today in the world financial system, simply from an analysis standpoint. And that's basically all I am. I'm not a great seer or seer of the future. It's just simply what I've done is simply done an analysis of what the reasons are that things are the way they are and what that tells us for where they're going. And so if anybody that would that from that perspective that would like to dig in to more of this type of information and to understand politically in the political economic system where we might be going, they can go preview a copy of my book on Amazon at The Citizen's Last Stand. Are you ready? But if you just type in The Citizen's Last Stand in Amazon, it'll take you right to the book, and there's both digital and paper copies available for anybody who likes to read old tech or new tech, doesn't matter. So just type in The Citizen's Last Stand, and I also have a blog site out there with a whole wide variety of articles on many topics, from technology to economic issues surrounding this. If they go to thecitizenslaststand.com. That's all one word, thecitizenslaststand.com. So either on Amazon or through the blog site, they can get more information on the book.
Well, I have to tell you, Jeff, this has been an extremely interesting discussion, and I'm looking forward to Thursday night already because I can see where we can develop a really tight discussion that a lot of people would find, fascinating. I know that if you've got a little bit of extra time, it's easier to get into the weeds. As a speaker, a public speaker, I know that sometimes I'm better off if somebody says, okay, you've got a half an hour to deliver a speech that I normally do in an hour. just because I cut all the fluff out and I get right down to the details that need to be discussed. So I really look forward to the discussion on Thursday night, and I would ask our listeners, please contact me, HappelMT at threeriversdbs.net. If you've got questions that you want Jeff to answer, please get a hold of me and let me know what those questions are, because we really want to answer everything that everyone, all these questions that people have.
That's exactly
this has been
right.
a fascinating discussion, Jeff. Thank you.
The greater the understanding, the less scary anything is, and I think that the more people understand what cyber cash and cyber currencies really represent to our political economic dilemmas and to a lot of issues that we have facing us in the destruction of the current central banking system, its own destruction, I think that's where the difference is going to really be made in the future.
I agree, and the thing that is so interesting about the cyber cash, the cryptocurrency market, is that it is really based on free market principles, and it's based on creating a product with actual work, requires resources to create this product, which is the antithesis of what fiat money is all about. We've had literally for centuries, and in our own country for over a century, we've had central bankers with the ability to just call the Treasury and say, okay, print so many bills, and then they loan them to us at interest, and the American people have been getting screwed for over 100 years with this fiat system, and the cryptocurrencies provide an opportunity to end that sort of system.
Yep, that's exactly true, and I really appreciate the opportunity to be able to explain it to your listeners and get the information out there. This discussion could go on for hours and days to assimilate the details.
I've got a feeling we're going to have this discussion continuing. I've got a feeling that our audience is going to demand that. So with that, I hear the commercial break coming on. Jeff, thank you, and I'll be in touch, and we'll talk to you on Thursday evening.
Thank you.